Ines Group Berhad, we have built a strong foundation as a Malaysia-based edible bird's nest company. Our subsidiaries Mingfeng and Dynamic Transforms are among the top 10 Malaysian companies exporting raw, cleaned edible bird's nests to China, reinforcing our position as one of the leading market players in Malaysia's edible bird's nest industry. Looking ahead, we are focused on long-term growth and value creation. Our plans include manufacturing bottled bird's nest and other herbal beverages in-house, giving us greater control over quality, product development, and formulation flexibility.
In Malaysia, over the past 4 decades, Hock Soon Poultry Farm has evolved from a humble family business into a leading force in modern agriculture. Today, Hock Soon produces over 1.5 million eggs daily, with operations spanning more than 20 hectares. Every day, freshly laid eggs are transported via conveyor belts into our facility, where they pass through multiple inspection stations. Hock Soon's in-house brand, Q+, has been serving the nation for over a decade. The range includes omega, selenium, vitamin E-enriched eggs, and jumbo-sized eggs. Hock Soon Poultry Farm, nurturing quality from farm to table.
What would happen? Machines run. Operation stopped. Tables are dirty. Business halted. Store closed. Staff gone. What if you had Manforce Group? With Manforce Group, every step is handled. Every risk is managed. Every regulation met, from permits to paychecks, ensuring legal, fair, and quota compliant start. Partner with Manforce Group right from the start. Powered by Manforce Group Berhad.
Where creativity meets strategy, and where brands are built on innovation and insight. We provide a complete 360-degree marketing and sales solution, creating real-world exposure through business events, awards, and networking platforms. We then strengthen online presence through digital content, media exposure, and performance marketing. To reinforce awareness, we extend the message offline through billboards, banners, and digital out-of-home media.
KleverStock is a content-driven financial media and investor insights platform. We integrate live stream coverage, educational content, market data visualization, and AI-powered tools to support investor understanding and engagement. In the past year, we achieved significant momentum across our operations and market visibility. We delivered nearly 99% of all IPO and listing day live stream coverage, featuring executive interviews, ceremony broadcasting, and real-time market updates. We collaborated with major corporates including Foodie, Aquawalk, and many others. We also expanded partnerships with investor relations firms, trading platforms, and marketing agencies. KleverStock is now ISO certified, and our official media accreditation has been renewed, enhancing governance, access, and professional credibility. Our content performance continues to grow rapidly. We achieved over 10 million impressions across social platforms, 1.2 million unique visitors in 2025, and more than 630,000 live stream views driven by our IPO and market coverage. These results reinforce our growing influence and visibility across the financial community. We advanced our technology with Phase 2 of our AI engine, enabling smarter sentiment tracking, automated summaries, and improved market screening. Our priorities for 2025 include strengthening strategic partnerships, enhancing our IPO and corporate livestream capabilities, expanding content production, and accelerating AI-powered investor tools. We remain focused on innovation, consistency, and delivering market-relevant insights. KleverStock remains committed to growth, technology advancement, and delivering meaningful impact to our clients, partners, and audiences.
In a world powered by data, Electricity is not optional, it is foundational. Every transaction, every connection, every system depends on it. Electricity sustains industries, enables digital ecosystems, and underpins modern life. Economic growth depends on stable infrastructure. Digital expansion depends on reliable power. EI power strengthens the systems that sustain both. We engineer certainty in environments where certainty is required. EI Power Berhad, powering tomorrow.
HSS Holdings Berhad, where we transform the finest bakery products into accessible delights for everyone. We combine premium quality with affordability, driving product innovation and leveraging our extensive distribution network to reach more markets, mini market, supermarket, and hypermarket. From HSS to LHMC and Kasaga, our commitment to quality, innovation, and customer satisfaction drives us forward. Join us in bringing incredible bakery products to the world. HSS, your trusted partner in bakery excellence.
Go!
Rest and go.
SRO. SRO, so you have a range clear launch.
And CDI.
Half of the case, processing and launch.
At Ines Group Berhad, we have built a strong foundation as a Malaysia-based edible bird's nest company. Our subsidiaries Mingfeng and Dynamic Transforms are among the top 10 Malaysian companies exporting raw, cleaned edible bird's nests to China, reinforcing our position as one of the leading market players in Malaysia's edible bird's nest industry. Looking ahead, we are focused on long-term growth and value creation. Our plans include manufacturing bottled bird's nest and other herbal beverages in-house, giving us greater control over quality, product development, and formulation flexibility.
In Malaysia, over the past 4 decades, Hoksoon Poultry Farm has evolved from a humble family business into a leading force in modern agriculture. Today, Hoksoon produces over 1.5 million eggs daily, with operations spanning more than 20 hectares. Every day, freshly laid eggs are transported via conveyor belts into our facility, where they pass through multiple inspection stations. Hoksoon's in-house brand, Q+, has been serving the nation for over a decade. The range includes omega, selenium, vitamin E-enriched eggs, and jumbo-sized eggs. Hoksoon Poultry Farm, nurturing quality from farm to table.
What would happen? Machines run. Operation stopped. Tables are dirty. Business halted. Store closed. Staff gone. What if you had Manforce Group? With Manforce Group, every step is handled. Every risk is managed. Every regulation met. From permits to paychecks. Ensuring legal, fair, and quota compliant start. Partner with Manforce Group right from the start. Powered by Manforce Group Berhad.
Where creativity meets strategy, and where brands are built on innovation and insight. We provide a complete 360-degree marketing and sales solution, creating real-world exposure through business events, awards, and networking platforms. We then strengthen online presence through digital content, media exposure, and performance marketing. To reinforce awareness, we extend the message offline through billboards, banners, and digital out-of-home media.
KleverStock is a content-driven financial media and investor insights platform. We integrate live stream coverage, educational content, market data visualization, and AI-powered tools to support investor understanding and engagement. In the past year, we achieved significant momentum across our operations and market visibility. We delivered nearly 99% of all IPO and listing day live stream coverage, featuring executive interviews, ceremony broadcasting, and real-time market updates. We collaborated with major corporates including Foodie, Aquawalk, and many others. We also expanded partnerships with investor relations firms, trading platforms, and marketing agencies. KleverStock is now ISO certified, and our official media accreditation has been renewed, enhancing governance, access, and professional credibility. Our content performance continues to grow rapidly. We achieved over 10 million impressions across social platforms, 1.2 million unique visitors in 2025, and more than 630,000 live stream views driven by our IPO and market coverage. These results reinforce our growing influence and visibility across the financial community. We advanced our technology with Phase 2 of our AI engine, enabling smarter sentiment tracking, automated summaries, and improved market screening. Our priorities for 2025 include strengthening strategic partnerships, enhancing our IPO and corporate livestream capabilities, expanding content production, and accelerating AI-powered investor tools. We remain focused on innovation, consistency, and delivering market-relevant insights. KleverStock remains committed to growth, technology advancement, and delivering meaningful impact to our clients, partners, and audiences.
In a world powered by data, electricity is not optional, it is foundational. Every transaction, every connection, every system depends on it. Electricity sustains industries, enables digital ecosystems, and underpins modern life. Economic growth depends on stable infrastructure. Digital expansion depends on reliable power. EI power strengthens the systems that sustain both. We engineer certainty in environments where certainty is required. EI Power Berhad, powering tomorrow.
HSS Holdings Berhad, where we transform the finest bakery products into accessible delights for everyone. We combine premium quality with affordability, driving product innovation and leveraging our extensive distribution network to reach more markets, mini market, supermarket, and hypermarket. From HSS to LHMC and Kasaga, our commitment to quality, innovation, and customer satisfaction drives us forward. Join us in bringing incredible bakery products to the world. HSS, your trusted partner in bakery excellence.
Good afternoon, investors. You are now on KleverStock with me, Madhavi, and I will be serving you the midday roundup with the latest market updates from this morning up until now. Opening today's market wrap with a look at the domestic front. Bursa Malaysia showed signs of recovery as it tracked a broader global market rebound following a strong overnight performance on Wall Street. Investors appeared largely unfazed by the latest flare-up in hostilities between the United States and Iran, choosing instead of focus on resilient economic signals, according to a market outlook by APAC Securities. Investors seem to be growing increasingly accustomed to the recurring nature of the geopolitical conflict. The research firm highlighted that the energy sector reflected this calm sentiment, noting that the pullback in oil prices suggests markets are not yet pricing in a genuine supply disruption through the Strait of Hormuz. At the time of writing, Brent crude futures for September delivery stabilized around $76 a barrel, retreating from a brief surge that topped $80 a barrel earlier in the week. Mirroring to the international risk on mood, the benchmark FBMKLCI bounced back by 8.39 points to sit at 1,685.7, recovering from a 6-point loss in the previous session. Despite the rebound, APAC Securities pointed out that the Malaysia's market barometer has slightly underperformed compared to its global peers, largely due to profit-taking in the financial services sector even after Bank Negara decided to maintain its current interest rate. Domestic caution appears to be playing a significant role in limiting sharper gains, as many local market participants choose to adopt a wait-and-see approach ahead of the weekend's Johor state election. APAC Securities stated in its report we would look for the local market to play catch-up with the global risk appetite once the election outcome is known, but maintain a selective heavyweight-focused stance into the weekend, which given the lingering geopolitical overhang. Heavyweights and blue chips led the midday recovery, with shipping giant MSISC climbing 9 cents to 7 ringgit 94 cents, healthcare group IHH rising 5 cents to 8 ringgit 37 cents, and precious metal gaining 7 cents to 7 ringgit 63 cents. Banking stocks also saw renewed buying momentum as a sector leader Maybank surged 10 cents to 10 ringgit 96 cents. CIMB added 4 cents to 7 ringgit 64 cents, while both RHB and MBank ticked up 3 cents to close at 8 ringgit 34 cents and 6 ringgit 50 cents respectively. Among the most actively traded stocks, SRKKAI edged up a 1.5 cent to 62.5 cents. SMRT gained 1 cent to 20 cents, and MUS advanced 1 cent to 32 cents. Moving on to our local currency and foreign exchange. The Malaysian ringgit started Friday's trading session on a positive note against the US dollar. Gains achieved as investors kept a close eye on global geopolitical developments, particularly concerning maritime traffic in the Strait of Hormuz. At the start of trading at 8 a.m., the ringgit ticked up to 4.0720 or 4.0815 against the greenback, improving slightly from Thursday's closing rate of 4.0750 or 4.0795. Beyond international tensions, domestic factors provided a strong tailwind for the local currency. Market sentiment was lifted by the central bank's latest monetary policy committee statement, which pointed towards robust domestic growth. Dr. Muhammad Abzal Nizam Abdul Rashid, the chief economist at Bank Muamalat Malaysia Berhad, noted that the central bank's optimistic assessment gave the currency a noticeable boost. He stated the sharp rise in electrical and electronics exports indicates that Malaysia is benefiting from global investment in artificial intelligence and technology. This translates into greater confidence and supports the ringgit. This upward momentum extended across the board, with the ringgit gaining ground against most major international currencies. It strengthened against the Japanese yen to 2.5080 or 2.5140 from 2.5091 or 2.5120. Advance against the British pound to 5.4618 or 5.4745 from 5.4654 or 5.4714, and climbed against the euro to 4.6555 or 4.6664 from its previous close of 4.6581 or 4.6633. Performance against regional peers was largely positive but mixed. The ringgit managed minor gains against the Singapore dollar, moving to 3.1512 or 3.1588 from 3.1518 or 3.1558, and ticked up against the Indonesian rupiah to 224.6 or 225.2 from 224.8 or 225.1. Meanwhile, it held steady against the Philippine peso at 6.61 or 6.63, though it experienced a slight dip against the Thai baht, easing to 12.1978 or 12.2325 from its prior close of 12.1886 or 12.2064. Now for some economic news. Malaysia's economy is on track to expand by 4.7% in 2026, driven sustainability by robust data center investments and a broad recovery in the global technology sector, according to the latest report from the International Monetary Fund. The growth outlook places Malaysia in a strong position relative to emerging markets and developing economies as a whole, which are collectively projected to see growth moderate to 3.8% in 2026 before bouncing back to 4.5% in 2027. In its report titled World Economic Outlook Update, July 2026, Global Economy in Cross-Currents of War and Technology, the multilateral lender noted that changes to economic forecasts worldwide are highly uneven due to a variety of domestic and international pressures. The IMF stated the revisions are heterogeneous, reflecting differences in commodity dependence, geographic exposure, remittances and tourism receipts, sensitivity to financial conditions, and position in the global technology value chain. On a broader scale, global economic expansion is anticipated to decelerate to 3.0% in 2026 and hit a 3.4% in 2027. This represents a drop from the 3.5% growth average recorded across 2024 and 2025, though the projections remain steady when compared cumulatively against the fund's previous assessments from April. The IMF attributed the ongoing global slowdown to geopolitical disruptions, though it noted that the rise of artificial intelligence has provided a critical economic cushion. The IMF explained the modest slowdown reflects the effects of the war in West Asia, being partly offset by accelerated demand-driven momentum in the global technology cycle thanks to the advances in artificial intelligence and its adoptions. The final economic impact heavily depends on how individual countries are positioned relative to global supply chains and geopolitical vulnerabilities. The report underscored a growing divide between nations and that were successfully integrating into the modern digital economy and those left exposed to commodity shocks. The fund observed energy exports outside the conflict zone which benefit from favorable terms of trade, whereas economics plunged into the technological-led upturn experienced stronger activity even if they are energy importers. Conversely, countries without strong ties in the modern technology boom are bearing the brunt of the global slowdown. The international lender warned that economic activity is weakening for energy importing nations and that have limited participation in the technology value chain, a vulnerability that disproportionately impacts many low-income countries. And we'll now take a short break, but don't go away. We will return shortly with corporate news and developments. Welcome back to the Midday Roundup. Let's continue with some corporate updates. PTT Synergy Group Berhad is selling a 4,987 square meter freehold industrial land parcel located in Bandar Bukit Raja, Klang for 17 million ringgit. In a regulatory filing with Bursa Malaysia, the Infrastructure and Construction Group announced that its indirect wholly owned subsidiary PTT Asset Sdn Bhd finalized a sale and purchase agreement with WDG Resources Sdn Bhd for the plot, which includes a double-story detached factory featuring a gross built-up area of roughly 20,197 square feet. The management indicated that the final transaction value was determined on a willing buyer, willing seller basis. The company views the transaction as a strategic move to optimize its portfolio and lower ongoing expenditures associated with managing holdings properties. The group stated in the filing the proposed disposal is deemed part of PTT to rationalize non-cross assets. With the disposal, these will reduce PTT's operational and maintenance costs of the property. The property carried a net book value of 15 million ringgit as of June 30, 2025. By shedding this asset, the company anticipates locking in a disposal gain of approximately 2 million ringgit. The group has already outlined a clear financial strategy for the incoming capital. PTT Synergy disclosed that 11 million ringgit of the sale proceeds will be funneled directly towards settling outstanding bank borrowings, while the remaining 6 million ringgit will be channeled into the general working capital requirements over the course of the next 12 months. And up next, we have energy crisis updates. Oil prices dipped during early trading on Friday but remained on track to lock in the solid weekly gains as a fragile ceasefire crumbled under renewed military strikes between the United States and Iran. Market analysts noted that while the active combat raised supply concerns, widespread anxiety regarding accelerating global inflation kept the price surge by threatening to dampen long-term crude demand. Brent crude futures slipped by 6 cents or 0.08% to sit at $76.24 a barrel, while U.S. West Texas Intermediate crude lost 8 cents or 0.06% to trade at $72.04. Despite the minor morning losses, both benchmarks maintained upward momentum for the week as a whole, with Brent on track for a 6% cumulative increase and WTI heading toward a 5% weekly gain. The flare-up in regional instability intensified following targeted attacks by Iranian armed forces against U.S. military infrastructure situated in Gulf states. The retaliatory actions followed heavy American airstrikes directed at Iran's eastern and southern coastal provinces, severely straining a 3-week-old ceasefire agreement. Compounding the regional uncertainty, local media outlets in Iran reported multiple large explosions spanning the southern region of the country, including near the city of Bushehr, which hosts one of Iran's primary nuclear power facilities. The resumption of active hostilities coincide directly with national burial services for Iran's late supreme leader, Ayatollah Ali Khamenei. The final services mark the end of week filled with massive public funeral processions and political rallies across the nation. Khamenei was killed during the opening salvo of the conflict on February 28. The ongoing warfare continues to stall a full reopening of the strategic Strait of Hormuz. Prior to the outbreak of the war, the vital maritime choke point handled roughly 20% of the world's daily petroleum and natural gas shipments. Daniel Hines stated despite the U.S. ramping up attacks on military sites in Iran, the market drew some reassurance from the Trump administration's decisions to avoid targeting Iranian energy infrastructure, the senior commodity strategy for ANS Bank. The further noted that the market's anxiety was partially alleviated by recent rhetoric coming out of Washington, adding this was aided by comments from President Trump, who said he doesn't expect a return to full-scale conflict. The White House has sought to downplay the long-term economic fallout of the fresh engagements. President Donald Trump publicly expressed confidence that the hostilities would not spiral out of control, asserting that any active military engagements would be concluded rapidly. Outside of the geopolitical theater, macroeconomic indicators from the world's two largest economies presented a mixed outlook for energy demand. In the United States, weekly initial claims for unemployment benefits dropped, providing evidence of a resilient labor market characterized by steady, low turnover hiring dynamics. Conversely, economic data out of China revealed that the procedure price inflation climbed to a 4-year high in June. The sharp rise in factory gate costs has squeezed profit margins for Chinese manufacturers as sluggish domestic consumer demand prevents businesses from passing higher input expenses on the buyers. And finally, wrapping up, we have major corporate developments and the deals across Malaysia. Axim Hospitality Berhad has secured a 63.5 million ringgit contract from Cosmopolitan Avenue, Sdn Berhad for the design and build of interior design works. IHH Healthcare Berhad said conflict in the Middle East has resulted in fewer patient admissions from the United Arab Emirates and Saudi Arabia at its hospitals in India. Dagang Exchange Berhad has launched XWHIZ, a homegrown artificial intelligence-powered meeting productivity platform designed to help organizations improve collaborations while keeping sensitive data within Malaysia. Moving on, Alpha IVF Group Berhad has increased its stake in Alpha International Women's Specialist Private Limited to 96.5% after subscribing 4 additional shares worth 1.2 million Singapore dollars through a rights issue. Hartana Kanyalang Berhad's subsidiary Hartana Construction Sdn Berhad has secured a 283.9 million ringgit contract from the Public Works Department Sarawak to construct Wisma JKR Sarawak in Kuching. PRG Holdings Berhad will commence a winding up petition against Premier D. Muara Sdn Berhad, a company linked to its largest shareholder, Dato Ng Yan Cheng, over 64.2 million ringgit in alleged outstanding payments for the construction works on the Picasso Residence project in Kuala Lumpur. And next, AirAsia X Berhad has officially changed its name to AirAsia Group Berhad, effective July 9, following the completion of its acquisition and consolidation of AirAsia Berhad and AirAsia Aviation Group Limited from Capital A Berhad on January 18. And finally, PTT Synergy Group Berhad is disposing of a 4,987 square meter freehold industrial land parcel in Bandar Bukit Raja Klang for 17 million ringgit, part of its efforts to rationalize non-core assets. And that's wrap for Midday Roundup with me, Madhavi, on KleverStock. Thank you for choosing us investors. Stay tuned for upcoming live stream programs.